Good day, traders. I want to do a top-down analysis of USDJPY. I want to do a top-down analysis so that you see how it is done from forecasting point of view, from higher time frame like weekly or monthly down to H1 time frame. All right. So I'm not going to start analyzing from the back, but at least you'll be able to follow the way I do it. If you have not watched my Elliott wave theory course, endeavor to watch it, because if you don't watch it, you are not going to understand how to do market forecasting. All right. And it is very important you know how to forecast markets so that you'll be able to get the direction of flow accurately. Like from here, for instance, if you have watched my video, you know that this is a contracting flat in the middle. Okay, on a weekly time frame, contracting flat. This is a move down. All right, this is another move down to complete this one. So this is a three-wave structure to the downside. Then this another move up. Okay, and then if you follow my video very well, you see this is an impulse. This is 1, 2, and 3 in the middle. All right. So if you have to label it very well right now, real quick, this is you can see this is A, this is B, and this is C. All right. This is another A. Okay. Then you have a big move down, which is a small A. We have 1, 2, and 3, which is B. Okay. Then what are you expecting, guys? You're expecting this move down to complement the structure. Right? You're expecting this move down. Okay. This is this will be a small C. All right. Let me label it well for you. A, B, and C. Okay. And this C becomes, this is A, this is B, this is C, and this C becomes the B structure. Okay, the B structure of this big impulse. A, 1, 2, and 3. That's three-wave structure to the downside. That's A, B, A, 1, 2, 3, B, and C. So that's the wave B. And then you have another move to the upside. This way, that's to make wave C. Can you see how we do our forecasting? Then after this wave C, in future for USDJPY, you're going to get this move right here. See this three-wave move down, three-wave move up. You are going to get another three-wave move down. Okay, you are going to get this 1, 2, and 3. Can you see? So this will now be 3 waves down. We don't know where this one is coming from, except we do what is called historical analysis. Okay, so we do historical analysis for us to know whether it's coming from upside or it's coming from downside. But based on what we can see here, this will be a 3-wave down, which is called W, a 3 waves up, which is called Y, and then you are going to expect another 3-wave down, which is called X, and then this is called Y. If you watch my Elliott wave theory course, you will know that a corrective structure that opposes the trend is the W. A corrective structure that is in the direction of the trend, look at the trend is up. This 3-wave structure is up, it's called X. And another one that opposes this flow to the upside down is Y. Since this one was W, this one will be Y. So this is the future analysis, 5 to 10 years to come analysis of USDJPY based on weekly time frame. Are you okay now? So right now, which wave concerns us? This wave to the downside is the one that concerns us right now. And why is that of a priority right now? Because this wave, by structural guideline, this wave has completed as a zigzag corrective structure. Why do we say it is complete as a zigzag corrective structure? The rule of zigzag say that this wave A of an impulse, of impulsive leg A, must be 50 to 61.8, which it has fulfilled here for us to make B. Okay, and as soon as that is done, guys, you have a C that will move to the upside, and that C is usually of equal leg with A. This leg equal to this leg, and if you measure it very well with the aid of a trend-based fib extension, if you drop it here, and here, you will see that you have made up to 100 to 123%, fib extension of A. So for that reason, you see that okay, the wave C is over. All right, the wave C is over. So what we should expect now is this move to the downside. This this is wave C of the internal structure to complete this bigger B corrective structure. So what we want is a move down, a move to the downside. Okay, so we have achieved our forecasting, purpose for the higher time frame. So what we have to do now is to go to lower time frame and see how we can capitalize on the structure to trade this wave to the downside. Okay, we want to trade this wave to the downside. So what do we do? What structure should we see to know that this wave to the downside will come? All right, so we go to 4 hours, you now see that this is the kind of structure that you will see at resistance, and you want to carry out what is called a divergence test. Okay, that's what is called a fake flag test. Do you notice that for every impulse, this way, you must have a correction. For every impulse, there must be a correction before continuation. And then if you want to know the depth of this correction, you take a fib, and fib this impulse, and then you are looking forward to having a correction that will hit 50 to 61.8. You want a correction that will hit this level. Then from here, you have a move to the upside. Do you get it now? So that is how to use fib. For every impulse, there must be a correction. But in this case now, you can see that at resistance, you have, after this corrective structure here, you have this impulse. But are you wondering, how can the level of correction be bigger than impulse? Can you see that this correction here is bigger than this impulse? So because of the disproportionate nature of the size of the impulsive move and that of the corrective move, we are suspicious that this move is a development it's a bearish development to the downside. Therefore, we want to carry out a test to prove whether this move to the upside will come, or this move to the downside. This move to the downside is what we should expect. So we need to carry out what we call a fake flag test. This is what I call a fake flag test, guy. And this fake flag test is carried out with a divergence. And how does it work? We want to see that this market here is making, you see it's making a lower low. Okay, you see this low? You see this low is lower than this one. You see this low is lower than this one. You see this low is lower than this one. All right. So you want to see whether if you plug in an indicator, you are going to get either a lower low from your indicator or a higher low. So if you put an indicator, very quick, guys, you will notice something. If you come to this indicator, this RSI, can you see we are getting a lower low on the price, okay, and you are getting the same lower low on the RSI, and even on the stochastic RSI here, you are getting a lower low. Okay, what it means is that there is no divergence, because from the if you don't understand what divergence is all about, go to my video and search divergence trading strategy. You will have a proper understanding of what divergence is all about. You see, what we see here is convergence instead of divergence. Can you see lower low, lower low, lower low? Can you see lower low here? This one lower low. But assuming it makes something like this, low, high, high, high. Can you see? Assuming the indicator is making a higher low higher low, higher low. As this one is making a lower low, lower low, lower low, I can beat my chest that this wave will come. Why? There is a divergence between price and an indicator. But in this case, it is not so. So what do we see instead? All right, what do we see instead? This one is making a lower low, lower low here, and indicator is also making a lower low, lower low, lower low. That means that instead of divergence that should have pushed this one to the upside, there is convergence. There is agreement between price and indicator. And what is the implication of this agreement, guys? The implication is that this move to the downside will continue to the downside and the upside will not come. Okay, this move to the downside is what we are going to be seeing. All right, that's what we have, the test we have carried out with this divergence, guys. So now, how do we approach this? Okay, I was prompted to think of doing this video because of the trade we took today on USDJPY. All right, so after we have conducted this kind of test, okay, in the morning, when we spotted this setup, we've been following it since last week. Let's say, I think yesterday, the market was here. Okay, and as the market was here, it made a move. We expected it to retrace to this level. Because what we are actually expecting is that we are bearish on this market, but at least we expect that this correction here, guys, all right, this correction here, guys, should come to at least 50 to 61.8. That is the rule. That's the rule we have set for ourselves. It should come to at least 50 to 61.8. And guys, if it should come to that retracement level, it means that we have to expect the possibility of formation of a zigzag here. Okay, a zigzag as a correction for this impulsive leg to the downside. Okay, so if we see a zigzag here, guys, then we'll be able to say, oh, this is a valid supply here. This is a valid supply right here, guys. This is a valid supply inside here. So from here, we can take this trade to the downside. Okay, that was our expectation. And yesterday, we did take UJ. Okay, and as we took UJ, it gave us break even, guys. Give us break even. You see, we enter at this pullback here, we enter here, and this market gave us a little this thing and came down. So now today we got in again. Let me tell you what happened, guys. Let me tell you what happened. So instead of a zigzag that we were expecting, where's the zigzag? This leg has formed, this one has come, so we expect this to come here, so that this push to the downside will have succeeded in giving us 61.8% retracement. But what we did, because we, as typical day trader, you want to capitalize on every small move in the market, which we have to start to discourage ourselves, you know, against doing that kind of thing as from today. Because if you see that in a bigger time frame, the flow of the market is bearish, it is a downward trend. So why must you capitalize on a small buy opportunity just because you are a day trader? You want to catch few 40, 50 pips. You can be caught off guard, which was exactly what happened today. So instead of this expanding flat, that instead of this what do we call it, zigzag that we are expecting before the market will move to the upside, the market actually formed what is called contracting flat. That was where it knocked us off ground. After this impulse, 1, 2, and 3. Let me show you the contracting flat, guys. If you don't know contracting flat, go and watch part 3 of my Elliott wave course. You will see what is called contracting flat there. Okay, I've moved to the other side, contracting flat here. Okay, let me clean some of these stuff so that you can get it clearly, guys. Okay, all right, let's go to 1 hour. You see the contracting flats right now. See, after this wave, guys, after this wave to the upside, we have this pullback. We're expecting this to happen. So what we actually did was to buy this move. We wanted to buy this move to the upside so that we'll take profit here and at the same time look for sell opportunity to the downside. But guess what? Instead of giving us this wave to the upside, what did they give us, guys? It gave us this contracting flat. This is a push. This one A, B, and C. Give us this and drop. So what is the structure of a contracting flat? Contracting flat moves after you have an impulse, you have a move with A, wave B does not get to the start of wave A, and wave C does not get to the end of wave A, and it moves to the down upside. This is a contracting flat, guys, for a bullish market. Okay, it's a contracting flat for a bullish market. Now let me show you the structure of a contracting flat for a bearish market. You have a down move, you have wave A, wave B does not get to the beginning of wave A, and wave C does not get to the end of wave A. This is a contracting flat for what? For a downtrend, guys. If you don't know this, go back to my video and watch part 3 of Elliott wave theory course. Look at it here. That's the same thing that happened here. This one does not get to this, and then this one does not get to this. Can you see? That's the shape of a contracting flat. So instead of the expanding flat, a zigzag we're expecting to buy to this area, the market dropped. Okay? But now, the question is simple. As it dropped, does it mean it will continue to drop to the downside? No. Why will it not be dropping to the downside? Supposing that this market has given us this structure, okay, upside here, then you can see that it has come to take order from a higher price, from at a premium price. And if this will happen, then we are sure that we are going to have a push, a very big push to the downside. And when we have a very big push to the downside, we just make a corrective structure here and push more to the downside, because on weekly time frame we have a bearish market. But for the main fact that this market did not make this structure to grab liquidity here, okay, it didn't make that structure. It rather made just a small contracting flat and drop here. That gives me impression that this market is not ready to fall flat right away. Why? What was the order that was picked here? Look at it, guys. Let me show you, guys. Let me show you. This is raw analysis, guys. Look at it. Which order is here that the market had to take to come here? Do you see this high here? There are liquidity residing here, guys. So I'm still optimistic that this market will make an upside to come to this area, take up all this high, come to this area, and then we look for sell opportunity to the downside. But the lesson we have really learned from today is that even though we are day trader, we do not want to take any opportunity that we consider as being too short. For instance, this is an opportunity we wanted to capitalize on. Wanted to capitalize on this opportunity, guys, thinking that this is the right place to pick order to sell. But can you see, instead of that, the market did another thing. It did a contracting flat and drop. And can you see, as it dropped, it didn't drop too hard. And what is it doing? It's making an upside. So if the market comes here and make a corrective structure here, be sure that, of course, this kind of scenario, the corrective structure is not going to be big, it's going to be small. 1, 2, and 3. It will just push to the upside, grab liquidity here, guys, and then we look for sell opportunity to the downside. Okay, and by the time it make this up push, we want to consider two highest points, 2 high points. For instance, swing point, consider this one, consider this one, consider this one. Okay, so if we go to our indicator, we want to see what is called a hidden bearish divergence. Okay, a hidden bearish divergence. How do you get a hidden bearish? Sorry, guys. Okay, how do you get a hidden bearish divergence, guy? I'll show you right now, real quick. See it here, guys. You see this high? You see this high lower than this high. This high lower than this high. Okay, can you see this high is lower than this high? This high is lower than this high. But if you come to your indicator, you are going to actually get a high here that is higher than this high. Can you see? If this one is here, this one is here, and if you connect it, guys, you are getting something like this. So it's pushing up here. This one is low. This one is lower here. And this one is higher here. But if you get to this this price, you see that this one is actually lower than this one. So this is what is called a bearish hidden divergence. Do you understand? Because here is giving you a better price to sell, even though it's making a lower lower high. Okay, so that is the confirmation we are going to be doing if we have this eventual push to the upside, which I believe it will come, because trading is more of logic than any other thing. It's logic, because the reason why I say it's logic is that if this market must fall flat, then it must get a better price here, where there are a lot of order that will push it to the downside. But right now, it didn't come there. Rather, it fell down from demand level. Let me put it that way. Okay, because if you are considering this range now, you see here is as demand, it's not a supply. Who is selling here? Which bank is selling here? When they see opportunity lie here. So this one is just push here, grab order, and can you see, if you look at here, you see this market reacted here and pushed to the upside. So you must see a reaction here, because there is something about this price that made this market move to the upside. That reaction will come here. So that's what we are saying, that we love to see this market make this push. As soon as it make this push, guy, I can bet it from here. We're going to have a structure. Okay, a structure up, and then we'll come down straight away. Do you get now? So that's my thought on USDJPY when you have to do a top-down analysis. And then if you have to look at it based on wave structure, all right, if you have to analyze this based on wave structure, of course, you know, this is what is called the orthodox top. Okay, this is the orthodox top. Even if this one, if this level has broken this one, this is not the top of this structure. This is the top of this structure. This is considered as the last high of this structure. Why are we not considering this as the last high of this structure? Because this move to the upside is part of the corrective structure after this high is made. Do you get now? So therefore, you will say that this is wave A, this is wave B, and this is wave C. Here being the orthodox top. Okay, so if we have A, B, C here, then everything that is happening here is A, then all that is happening here, guys, is B. Then you need what? C. You need C here. So after this C here, guys, that's when you can go bearish to the downside. Can you now see that the intuition, the observation and the logic I brought into it correspond exactly with wave structure? Can you see? Correspond exactly with wave structure. So we want to see this move to the upside. But guys, are we going to buy it? No, because we have learned from our lesson. We don't buy this kind of trade. We want it to complete the structure and trade in the direction of the market. Okay, trying to buy this one is you trying to catch a falling knife or a diving knife. If a knife is falling, you want to catch it, it's going to wound you, guys. It's going to wound you. That's exactly what happened here, guys. So it wasn't as if we were wrong structurally, we're not wrong, but along the line, the pattern we're expecting, the corrective structure we're expecting, changed to another one. And as soon as this falling was happening, I already saw that, oh, we are seeing what is called what? Contracting flat here to drop here. And since it is contracting flat here, and it is not expanding flat or zigzag to push to the upside, I knew that this is only coming to grab liquidity at demand being this level where this market took off from. Can you see? There's something special about this price, okay, that made this market to take off about around 27, something special around 27. Right now, the market is close to 27. So we expect this move to the upside. We are not going to buy it, but as soon as the market get to the top here, we are going to sell it to the downside, okay? So some people got a break even for this, their UJ sell and UJ buy, because they were of course in profit. So some people they took a break even. Some people that did not break even, they took a loss on it. So the beauty of it all is that we have a daily maximum daily allowable loss limit. There is a loss limit that you are permitted to take of your account in a day. So even if you lose a trade and you are losing maybe 1% or 2% of your account, it's just so infinitesimal and so unimportant that you can increase your pain index. All right. So that is it, guys. That's what I want to show you. You can see that we have learned from this video how to do top-down analysis, starting from weekly to daily to 4 hours to 1 hour, how to carry out a divergent test of a possible formation of fake flag in the smaller time frame, especially if the flag is happening at resistance. It's very suspicious. You have to carry out this fake flag test, with the use of divergence to show whether it is a fake flag, in which case the market will continue to move to the downside, or it is a fine flag. Okay, it's a fine and well-formed bullish flag with divergence, so that the market will move to the upside. So if you have not subscribed my channel, just consider subscribing it, because I promise you I'm going to be dropping important content, okay, content that will help trader to be very independent in analyzing financial market. So do subscribe to this channel, to support the channel to grow. Press notification bell and try and share. Not only share, make sure after watching the video, make your comments on the comment section. Let me hear you talking to me. If there's anything you don't like about the video, let me know. If there's something you like there, please pass your comment. All this will help me to grow, will help me to improve day by day. All right, I think I've been able to assist you this night, or clarify some of these basic concepts to you, and you see this is practical application of Elliott wave theory. So I will see you in the next video. All right, peace.